All right. Hey, everybody. TG Watkins here. It is June 18th when I'm recording this, and I have been in the Moxie room for the last hour and a half already, kind of going around the market. And so, for those of you out there on the social medias, we've got a bunch of them, I think X, Facebook, YouTube, and maybe even LinkedIn now. So, we got a lot of people out there. I see the eyeballs are starting to grow as far as people tuning in. So I'll kind of continue telling you guys what we've been up to. I have been hesitant or wary about this market for the last few weeks because I've been seeing some negative signs. But basically, I've been looking for the market to cool off. We know that the market had a huge move at the end of in April from the whole tariff pause situation, everything else like that. And at some point, I was looking for the market to start pulling back, but it was having, I mean, it was amazingly strong to where every time bad news came out, Trump Elon fight, it was a liquidation break. Market kept going up. The Israel Iran situation, yes, that took the market down, but then Monday, there might be a deal that can be made. So the market jumped up. We didn't get suckered into that one because we could tell that was a fake out move. But as time has gone on, it's looking to me like the market has kind of worked off its overbought condition. It's basically been flagging. It has been holding up like a champ, because that's the other thing that we have to look at is, yes, we know there is a lot of bad news out there. We know that there's a tinderbox happening. It could get lit off and Trump could get in the fight too. And there's all that kind of stuff. And yes, it is concerning, but the market doesn't seem too worried about that. Yes, it pulled back. Yes, it's had some stuff. But what I'm starting to look at, and basically today it seems like I'm having to change my view on things because I was prepared for a little bit more of a pullback. I really wanted to see price come down to the daily 21, but we might be getting a double bottom right here. Okay. And that we could only figure this out starting today, because obviously yesterday we had the market moving down from Monday into Tuesday. So the cautious stance was definitely warranted. And here we are starting to potentially see a higher low in the market. And the other thing that we're looking at is, or we just kind of go around, and there's a fair amount of strength out there today. And even looking around at individual names, I've been referencing Tesla a lot. I was looking for Tesla to come down a little bit further as well. Now, I really kind of wanted to see that if this market was going to pull back more and if there was going to be a little bit more weakness and try to burn off this overbought condition, I was looking to see if Tesla could come down anywhere around 305, anything like that. I wanted to see if that was going to happen. But now we look at this, and once again, it looks for now like Tesla, it wants to put in a double bottom here and actually start to hold certain moving averages. And the Moxie indicator, while earlier in the week you could see a double top with negative divergence, and that was holding me off from getting into Tesla, it's starting to look like this double bottom might be something, and the Moxie indicator is starting to tighten up. For those of you out there on the social medias and stuff, when I know you probably don't know everything about the Moxie indicator, and I don't talk about this too often, but these yellow dots, I know they look like lines, but they're technically dots. I call them the Moxie power dots. It's basically the squeeze for the Moxie indicator. And what that is telling you is that the Moxie indicator is really, really nice and tight, and that a larger than expected move is setting up. It can go long, it can go short, just like a squeeze. It's trying to just tell you that there's a consolidation area. And I'm looking at this, and I would probably lean to the long side for this particular setup. So I'm seeing a 15-minute squeeze, according to the Moxie indicator, show up on this. Now, yeah, we also have an hourly squeeze, the normal, the simpler trading squeeze on that. And the fact that this is starting to hold kind of tells me like, okay, I need to be careful about my thought process on the downside. We might have gotten most of the downside that we were expecting. One way to look at this that I keep referencing to for the Moxie subscribers, and I've put this out a couple times on the internet, is that there has been a pullback underneath the surface in a majority of stocks. This is the number of how many stocks are over their 20-day SMA, and we maxed out at almost 90. I think it got up to like 87 or 88%. Okay, that tells us that the market's way, way, way overdone to the upside. You can even see that the 50-day also topped out. And since basically mid to late May, there has been a pullback underneath the surface. Now, of course, during the whole time, yes, there have been stocks that keep going up, of course, but the majority of stocks have been pulling back. And so this is why I've been very cautious, because I didn't know how far this was going to go. And was this kind of weakness going to catch up to the market and pull the market down? Or was the market, the SPX, was the SPX going to stay sideways and let these things happen underneath the surface? And then when enough stocks have pulled back and found their support and kind of redone their overbought condition, then they start to trend back up. And then that allows the market to then resume its uptrend. And when I first started talking about this for this series, for this round, in mid-May, hopefully you guys in the Moxie room can confirm me on this one, but I said I would be looking for this pullback to come to about 30 to 40%. I think yesterday we tapped about 38%. So technically got into the range that I was looking for. I was kind of hoping for a little bit more. I really wanted to also see the SPX come down to the daily 21, but I can't always get everything that I want. And so if this is all the pullback that we're going to get, and we start to see this thing hold and actually start to trend up, then we can't be too stubborn in our view of a market pullback. And as I continue to speak, even though it's FOMC day, this thing looks like it wants to start moving back up. Even Tesla is looking fairly strong out there. And I just keep looking around, and big names like TEM, we finally got our pullback. And these are good signs, good indications of what I'm looking for from a market to indicate things to me. I have been waiting for the last couple of days because things like this were pulling back. They were confirming what I was waiting for. But now you can see we had a dip, and look at this. We are right back up. So a name like TEM looking pretty good. It has kind of fixed its overbought condition just ever slightly because price was a little bit too far away. And now they're starting to come back in and dip. And I like what I'm seeing here. And this one I've definitely put out there publicly, saying that I think TEM is going to be a very, very strong stock into the future. So however you guys need to do something about that out there, come join the boat. So yeah, big names, TEM, even Nvidia. These are part of the reasons that I was being a little bit hesitant. Is you can see here, there was a Moxie price trigger as well. And Nvidia is right here at a previous all-time high. So yes, I was expecting some resistance. Now, if this market just doesn't care, then we could certainly see these things higher. And Nvidia for the last week, 2 weeks, has actually been going sideways in through here. So it's been resting. And that might be enough. Usually I like to see these things actually break below their 50s and come down a little bit. But this sideways action might be enough to actually refresh these. And one way of looking at this, actually, now that I'm talking about it, maybe you can kind of look at that. Maybe that is a little bit of a back test of a trend line. So we'll have to see. If you guys are Nvidia fans and you're looking for a fresh entry, maybe this is it. Now, for those of you who do know the Moxie indicator, the Moxie system, you're like, how are you going long when the hourly indicator is below zero? And yes, this is why I've been concerned and a little reluctant and hesitant. But we have to remember that the Moxie indicator is a momentum-based tool. And while momentum might be coming out of it, and also remember, momentum comes out of a sideways move. Okay, so there has been no momentum in Nvidia for a little while. And so that's why we're seeing negativity. And if Nvidia has caught its breath and actually wants to start going back up, then we should see the Moxie indicator start to turn around. But remember, it's an hourly chart, so it's going to be a little bit slower than perhaps what we are seeing here on the 15. So if this is your thing, then just start looking for something like that, and if it can keep going higher. And another way of looking at this, SMH is the other semiconductor ETF and index. And I was being very hesitant up and through here. And I think for good reason, because you can see that there was a pretty sharp pullback. Granted, maybe it was a little bit news-based, but I also think it was very technical in the fact that this thing was getting a little bit overbought and needed to come back down, and look what it did. It did pull back. Now, what's surprising me is that it really only wanted a one-day pullback, and now this thing wants to continue moving up. And I don't want to stick my head in the sand too much and ignore things like this when the market is telling us, actually, I think we want to keep going higher. And so this is where I have to look at this, say, I was looking for a pullback. I think we got the pullback. And if these names want to continue to go higher, then we need to go with until the next time that we start seeing some weakness and some concerns. And so if something like SMH wants to just continue to plow along and hold its hourly 50, then so be it. Now, if that changes, once again, if I'm wrong about this, if this changes, and if this thing decides to sometime later start to break down and fail, then that's what it is, and that's just how we have to go. I think I've been trying to be pretty cautious up until this point, and now the market seems to be communicating to me that it wants to go a little bit higher. Andrew, nice. 9,000% P&L on Nvidia. Is that stock? Because I'm trying to think, has Nvidia been moved 9,000%? I know it's had a few. It's had some. What am I trying to say? Cuts, repricing. Okay, it's been a mix of stock and options over the years. Nice. I was going to say, I don't think Nvidia itself has moved up 10,000%, even with the splits. That's what I'm trying to say. Splits. Yeah, P out there on X. I agree. This is why I have been concerned, is that I've been talking about this inverse trampoline move here on the hourly chart. Certainly have. And that's what I'm trying to figure out and through here. And we've been getting a pullback. And so you can see that we have come down. Now, again, I wanted to see if the SPX could come into the daily 21. Now, here's kind of where I'm having to kind of hedge my situation and see if this thing is going to be bullish or bearish, because there are still a lot of names that are moving up from there. If we go back to 2017, and I keep referencing this one because I think it is a fairly good example, the SPX may not want to go up, but it may not want to go down either. And if you look in through this section, you can see that the SPX went sideways for a very, very long time, and then found enough strength, took enough time, and then finally resolved to the upside. Meanwhile, this is not bearish, and individual tickers will recognize this and say, hey, as long as we're not going down, then I'm free to go up. You know, consider it like a yellow light. We've got green light, red light, yellow light. This is definitely not a red light. And so as long as it's green to yellow, strong individual stocks will take that and say, hey, let's go higher. And so that's one thing that I'm having to look at and say, are we in this section where we're just going to continue to flag, and maybe it doesn't look great, but eventually it doesn't go down and actually continues to find support and eventually moves up. Okay, so that's kind of where I'm wondering if we're at. And in fact, if we want to, let's take a minute. Let's see. Let's go. Let's 2:15:17. Let's check this out. I haven't done this on a long time, even on the social medias. Let's do on demand, and let's see if the computer actually works with us. Sometimes Thinkorswim is a little bit challenging. Now see, that was February 2017. And let's go back and let's see what that section looked like on the hourly chart. And there you go. Here is your inverse trampoline move right there, which is the same thing that we are experiencing right now on the SPX, is that inverse trampoline move. We have price over the 50. The MOX indicator is below zero. I have been calling that for weeks at this point, at least 2 weeks. And it has been concerning to me. And what you can see is I would have been saying in the same place, do not go long. That is concerning. Price is up over the 50. The MOX indicator is below zero. Caution, caution, caution. And what you can see is, yes, the SPX did not go up, but it also didn't go down. So what was it doing? It was basically just flagging sideways, waiting for support. It turns out that that support was about the 200 and was about the 21. This is why I keep kind of targeting the 21 currently on the S&P. And then what you can see is all of a sudden there was a breakout. The MOX indicator was a little bit late. Maybe I'll see if I can look at the 15 and see what it says. Yes, there was a pullback to actually confirm, like, hey, is this real? And then you can see it finally got back up over the hourly 50 and did it in a little bit clearer way. Those of you in the Moxie room, you can see what I'm pointing at more clearly. I don't need to explain it too much. But you can see here was the test. Here was the, okay, are we really going to do this? And then there was the confirmation. And then you can see the Moxie indicator started to fire right there. And what I'm trying to do is prepare myself for either event. Number one, I was preparing myself with this inverse trampoline move, which is usually like, hey, watch out below. And we were seeing that the UVIX was setting up bullishly. But if the market is actually stronger than we think, and really all it wanted was some time, we could be in this choppy area, and then we start to get a move up and a move up. And I don't really want to miss that if we are going to get something. Okay. And so that's why, yes, I have been extremely cautious in through this section because of the Moxie indicator and because of what we've been seeing. Let me see what the 15 looks like. Let's see if there's anything we can discuss in through there. Let's see, where is that? Right there. So right there before it took off, you could basically make the argument that right here, you see how price was coming down. Look at the Moxie indicator staying flat and then started to move up all of a sudden, really all of a sudden. And I have a feeling that individual tickers back in the day here were probably feeling this and saying, look, the market's not going down. And they were using it as a green or yellow light in order to continue moving up. But if you looked at only the SPX, you'd be looking at this and be like, this is totally messy. What's going on? And then, out of the blue, you get a move to the upside. I could even look at this now that I have the 15 and look, here's a double bottom. And you could even say you could have some positive divergence right there. So let's take everything that we just did right there, looking back at 2017, and let's turn off the on-demand. So those of you out on the social medias, X, Facebook, YouTube, you guys are getting like a free masterclass session right here because I don't do that too often, but that is the whole point of why I like to go back there and use on-demand is to actually look back, because you can't use the 15-minute and go back far enough. You have to use on-demand. And this is where I tell it almost every class that I do is that the on-demand feature is one of the greatest tools that nobody ever talks about. There is so much value in being able to go back and actually look at this stuff, because if you went back in 2017, you can't get the hourly chart to go that far back. You can only look at the daily. And you just don't get enough information by looking at the daily to figure out all these nuances of what's happening back in that moment that you really want to know on the hourly and the 15, because those are the things that are going to tell you just the little details that help get you into these things to figure out what direction you're actually going. And so just like back in 2017, yeah, the Moxie indicator, not happy. And for the most part, that was correct. The market has chilled out and there was a pullback. And we got some of that right. But and the market has also been resting. It's been kind of going sideways. But if this market is done resting and actually wants to take one more leg up, then perhaps we are starting to see a double bottom, and perhaps we're starting to see some positive divergence on the 15-minute time frame. There could still be some noise. So maybe trading the SPX itself is going to be a little bit challenging because of all the noise until it finally explodes to the upside. And if you look back at 2017, when the market exploded, I don't know what the news was that day. But for us currently, the news might be, and maybe it's next week, what's going to cause the market to explode? I doubt Jerome Powell is going to say anything about actually cutting rates. Maybe he'll be dovish, but I don't think he'll say anything about cutting rates. But probably a resolution to the Iran-Israel conflict right now. If there's any kind of peace agreement or anything else like that, and heck, maybe there's something about Ukraine in there too, that would probably be the thing that sets off the SPX. But if you look back at 2017, we're not going to remember what news came out unless you do an AI search. But we're going to look at the charts and be like, okay, what was the piece of news? What was going on back then? What was all the stuff that was happening? I don't know. I don't remember. And so we're living in it right now. And that's why I'm saying, I think we might have gotten the refresh that we were looking for. And it's doing it via time instead of actually pulling back. And that's why I'm having to be a little bit careful in through here and watch my tune as far as my concern about this market. And, looking at the UVIX, yes, this was very concerning. This was starting to set up in a very bullish way. If the UVIX is going up, watch out, market. But you can see that it's not quite getting past. It's not really getting any traction. And so this is something we're going to have to watch over the next couple of days, is if this starts to come back down, market's going higher. If this happens to stay persistent and actually starts to build and set up again, okay, then we need to watch out. And P, as far as the put call ratio can be challenging. The put call ratio can stay low for a very long time. Case in point, right here. Look how long that thing was down around 0.6 or 0.7, okay? And the market just kept going up. Yeah, there were a couple dips along the way, But the put call ratio, it's kind of like when I use the slow stochastic. The slow stochastic, I don't use at the high side. I don't use it to tell me when the market's overbought or something's overbought or anything. I only use it to help pinpoint lows. And I find the put call ratio to kind of be the same thing. It doesn't do a good job telling you when the market's ready to top out and roll over. Sometimes it kind of can. You got this little moment right there and a couple other things. But for the most part, it's really challenging because a bull market can stay a bull market for quite some time. I really like the put call ratio to figure out where lows are. I think it does a really great job of figuring out where the low is, right? If you look at that, and especially this extended one, right in through there. Yeah. So I think that's how I like to use the put call ratio. And so what that means is we have to use other things to help figure this stuff out. Yeah, Otis, I'm glad you like it. You're saying it's amazing how many times the Moxie indicator zero line and divergences work. Keeps you out of trouble and gets you in at the right time. Yeah. Yeah. So, I've been prepared. We've been watching this with the UVIX, but maybe we blew off a little bit of steam and now the market's ready to go higher, despite everything that's happening out there. The other thing, I'm looking at the FNGB, which is the leverage ETF of the FANG stocks, and same thing. I was looking at this, just like Nvidia, like, hey, we should be coming down. And maybe this market is like, yeah, we're going to kick the can down the road. We're not really ready to go down yet. And you can see we did get a pullback, but it's hard to argue that we are right back up. We are right back up there. And if this thing wants to continue and break out, I can't ignore that. So here's where I'll say if the market is going to be right or wrong. If something like FNGB decides to continue to move up and actually stay up and follow through to the upside, market's going higher. If the market decides to fall back below the hourly 50, then market's going lower. Okay. I think this is a very near term go, no go gauge. So if you guys are really looking for some information out there to see what's going to happen, I think this is a fair metric to use, because I was looking for a pullback and I was looking for a pullback. And now this sucker is right back up on top, despite the Moxie indicator. And now we'll have to see if the momentum, because remember, it's a momentum indicator, and momentum has been non-existent for the last 2 weeks. So that's where I'm at, guys. That's where I'm at. Okay. I've been on the microphone for almost 2 hours this morning. I need to get some of my own work done, especially if this market is going to be doing something. We have added to a couple positions, actually just one position, I guess, this morning. And I think that there are a few others that I'd like to add. I need to do my own research. I need to go through this market and see if this is in fact validating, and that I need to change my stance and say, okay, we have waited long enough, and I think that there's something to do here. So let me go around, let me go spend some time doing this, and yeah, we'll go take some action. For those of you out there on X, Facebook, YouTube, if you guys, I'm sure you guys are like, hey, where are the trades? Well, that's what the Moxie Room is for. We also have a webinar coming up on the 26th. So next Thursday, and I think it's going to be at 7 p.m. Central. So 7 p.m. Central is when we're going to do it. And we're going to be talking about how I made the 2,060% trade on SOXL, totally nailed the bottom of the market on the tariff tantrums. I'm going to be talking about how the standard Moxie patterns helped me do that. And we're going to be talking about leveraged ETFs and how that helped me figure out the bottom of the market. And now that this market, they keep inventing all of these new leveraged ETFs. Lucid has one, Robinhood has one, Reddit has one, TEM has one. All these big names are starting to have leveraged ETFs, which I absolutely love, because I'm really, where I came from was a stock trader. And so we're going to be talking about that. And then also because this market is pretty strong, and I do think that eventually we are going to break out and make new all-time highs on the SPX. I don't know when, I don't know what path, but I think we are. And I want to make sure that we have some longer-term patterns and longer-term setups. So we're going to be talking about all those things on this webinar. It's going to be free. It's going to be next Thursday. So come sign up, tune in. You guys will be seeing advertisements about it soon. I'm still building the presentation for it. And that's where you can kind of come in and see a little bit more about the Moxie indicator, what I do, and what we do in the room. Okay. All right, guys. Thanks again, and we'll catch you later. For those in the Moxie room, I will be in the room